it is already mattering, right? So we're seeing bankruptcies soar, not in some relative sense that says, well, they're higher than the very low levels of 2022. They're actually absolutely at extraordinarily high levels, right? We're seeing the number of companies with $50 million in assets filing for bankruptcy cross the levels from 2009. Like, this is really happening right now. But because it's not happening in the public markets, or at least not showing up in the headline indices, nobody really cares.
So what's the trade then? I mean, it's short the Russell, long the companies that make money?
So that is one of the trades I have on, and it's worked actually quite well as a quality junk spread, right? The problem, of course, is defining quality properly. Does quality simply mean that you go buy things with large cash balances? Does it mean that you buy businesses that are perceived as high quality consumer staples? Do you overpay for that, right? Because the quality metric actually has a really interesting feature to it. And I would argue this is one of the concerns that I have right now, is if you define quality in a systematic framework, do you know what the definition of quality actually is?
No.
So the quantitative definition of quality is companies that exhibit high levels of operating performance and have very low levels of debt exposure. All right. And they outperform because people have historically undervalued those features. They've bought into companies that are high volatility and relatively levered because they theoretically value options more richly than they do the stable, safe space. Do you know what the evidence for quality being undervalued is?
Warren?
No, that it has outperformed in the past. Therefore, under a model of information dynamics, it says people undervalue that. At what point do they cease undervaluing it? They actually can't in the quantitative world, because the definition of quality is that they have undervalued them by definition because they outperform. What's the evidence that they're undervalued? Because they have actually gone up more than other stuff. And so quality has been a remarkably strong factor up until, we see it underperform in periods of speculative excess. We're actually going through one of those right now, where you see small start to balance, you see people chase in, you see the flows turn as people say, oh my gosh, I think the market, I think the economy is going to strengthen. We're not going to have a recession. I'm less worried about debt characteristics, et cetera.
Yeah,
right?
the Russell has closed that spread a little bit in the last
a little bit
or so. Yeah.
Right. But if you actually look at what's the single largest entity within the quality index, so QUAL is the quality ETF, right? If you look at the largest holding within that ETF, I just want you guys to actually see this here. Look at the holdings: NVIDIA, Apple, Visa, Microsoft, right? I mean, it's basically the four horsemen.